Gentlemen, hey, Crypto Sniper, quick post-triggering event on Bitcoin, a check-in to see how you are all doing and give us your updated take. Key point about all of this is that many people don't get, and I got some correspondence from some people, and you've got to learn a method. B, it's actually about making a couple up to 4 or 5, but sometimes as little as 1 or 2 really good key decisions at major event points, and then remaining and sitting with your view or position until the next major decision, which is why the macro charts are pretty important. Now we can go what I refer to as super macro, but we all know the story for that for Bitcoin. Largely it's a major bull market, and it has had a bear, and it's had a reversion bull. Now, I did warn when I say you want to look at your big time frame pictures, and I said this number of times. You exhausted when the fib was on here. You just ran your fib, and I've got a lot of HVF specific lines that are for my premium community, but I can remind you that you're at a 61.8 there, and you got a huge rejection. Then you were sitting trapped between the 38.2 and the 50%, like that, where that is 50 and that was 38.2. And you were getting continued rejections across your top. So that was the reason why we called short. Yeah, we wobbled a little bit here and there, but the key thing is we traded it short and we made money to the short side. And we were in early once or twice and nibbled a bit of red, but that's all paid for, all covered, already with 10x with where we're at now. And that's the nature of the thing. We always aim to be early to the trade, even when it's possible, but not necessarily probable, and accept that you can just manage losses. So if it's not yet ready and there's a fear of a major spike that you couldn't wear, get out. And also enter with multiple entries and small size, very small size, multiple entries. So we ping little pings on the market and keep seeing. And if it stays in the green for a while and you keep adding and it keeps pinging, then you start to end up. And that's what started to happen when we got really to the business end on the lower time frames, which I'll show you in a minute. But the key points that, excuse me, that we made at the time was that in actual fact, this was on the macro showing you real fatigue to what was a good bull market, just not an exceptional one. A very good bull market. You see, people are spoiled. Crypto kiddies are spoiled. They think you pump from 3.2 to 13.9 and you owed an all-time high every time. And you got to chase the moon rocket to the moon and jump on at any price because it's always going to the moon. And sometimes it just has a little pump into the stratosphere and then drifts down for a while. So people feel cheated by that, but I'm afraid it's called markets. It's called market dynamics. And you got to recognize things are what they are. And I also want to highlight, and this we get a lot of. In fact, I may just leave Phoenix and go Bitstamp because you get great history, a lengthy one with them. If you go log scale on Stamp, everyone seems to always assume that you're just due, as I've said before, sell-offs, basing out, major bull runs, all-time high, bear market, basing out, accumulation, all-time high, and they think it's all just got to be the same. You should be on your way to the all-time high now. And this is just the convex logarithmic, where at some point along this upper range, you're at 300,000, 100,000. Throw out the pissing contest for the biggest number. You can join Max Kaiser and the rest of the guys saying how I said long ago it would go too. And you may well probably be right in good time. But as far as tradable advice, useful advice right now, and getting the most bang for your buck, it's about as practical as a bucket of sick. And I've refused to enter that contest. But I do feel that many of those big numbers will potentially occur. But you could also and I never close the window, go to naught, and this could all be a big ruse to keep me out of getting as much precious metals as possible. So I do both. In other words, you don't overcommit. And everyone is always on this summit, yeah, we always have a bull and we make an all-time high. And I introduced this idea and so many people rejected it. As markets mature, they rhyme, but they don't exactly pattern out the way you want them to. And what you actually get, instead of straight to an all-time high again, everyone who's been taught once, twice thinks it's going to happen every time. What you end up with is an even better situation. So the markets love you and they want to give you gifts, but they also want you to grow and learn. So here's my take with everyone who comes on. It's a trading metamorphosis program that requires deep-seated personal psychological change within yourself. That's what trading does. To become a better trader is a noble cause because you become better emotionally and you also become more self-aware. So people that lash out at, oh, you know, they got that trade wrong and that's why I lost money. This is called an external locus of control. You lost money because of somebody else. When you start to own your own outcomes and decisions and you take everything you hear as potential and you select and you judge, and you're kind of like a judge on Britain's Got Talent, America's Got Talent, and you look to identify real talent and also to see logical, rational skill sets that may be probability, but recognize there's no seer that tells you exactly everything you want to hear. The minute you start dispelling fantasies, you can start getting probability-based outcomes. But as long as you carry the fantasy genie that there's some guru who's going to absolutely give you to the dollar everything you need to become millionaire next year, you're going to live a life of trading disappointment. So you're going to always lose. It's a probability-based game. And we even could have been wrong, but we took the probability-based trade here by being short and talking short. And as I said, I made this point already before and I reassess it. What will be a bigger gift instead of this convexity curve that many people have various versions? You just have to go to TradingView. I keep mine private because it all goes to my premium guys, but there's all the public views. You'll see 1,000,001 versions of this chart, but there are virtually very few or none that understand that every now and then you have an extended cycle and you get a super spike, but you can't initially run new highs. So you get what could be, and this is my core scenario, and this should be a scenario that gets many of you very excited. So people hate on us for trading short and making money. We got a lot of resentment for calling bear there, and we were literally the only one I knew that did. And we probably get some resentment, but probably less so as people are maturing for being bear there. But those are fractals. Let me just take them all off now. Those are in the big picture that we're now in of the monthly chart since 2012, even before. These are just small narrations, small battles and skirmishes in a much bigger game. And the gift that you would get from a continuation pattern here, instead of just your standard rounding, basing, new too high, bear, basing, new all-time high, bear, basing, and then waiting for your new all-time high. The gift that you get on the alternative scenario here is a delay to when you make money, because most people only make money on the long side. By the way, amazing spell for my entire premium community that have been trading crypto, and personally after a dull period while we were sitting in and nibbling a little bit of red during the gestation of the pattern, ensuring we don't miss it, we're now smiling. And it's more than covered the technique of lots of small entries pinging if we are getting to a critical point where it might roll. And that's what happened. We had a couple of fake squeezes on really short time frames that just did a partial spill, and then there was the spike back rally, and you're never sure. But as long as you're directionally confident and you get it right in the end, everything is paid for and some. And quite a long way. So it's been really profitable, and it's also on my investment Bitcoin where we got out, and the community's investment Bitcoin, we got out a long time ago. So you get out with a 4-digit number, and you could potentially be buying at 6.8. You could even buy at 5,033. You might not, but you'll probably be buying that investment long-term hold for the extra long cycle. That is your less emotional trading pot. It's an investment pot. It's not a trading pot. Back at 6.8 or even at 5. And at 5, that means you've got twice as many Bitcoin coming back up on your investment pot. It's a pretty useful thing. For what? Standing out of the market for a while? If you have a good reason, that's better than the hodlers. Anyway, so many people don't realize what a massive gift in actual fact a continuation pattern on this time frame actually represents. First of all, it's going to give you cheap Bitcoin to buy somewhere in this range. It may tap out at that core bear level where there was an immense amount of volume by price at the 6.8s, which we used to call the hard and soft ceiling, 6.8s to 6.2s. That was the soft ceiling and soft floor, and the hard ceiling was kind of the 7 and the 6 grander, which broke. Or you may actually have a dip through that if there's real bearish momentum, and we know which levels we like that. So we'll be closing 70% around our target, and we'll be closing a speculative 30 at a lower level that I've discussed with my premium guys. But the point is, at some point, it will start to see loss of downside momentum, in my opinion. And I don't assess this to be something that will run that low. So you've got some people that are all just, that's it, Bitcoin to 1,000, 2,000. We looked at it when we were here. We said that's a continuation. And we looked at that scenario there, and we had mentioned it, that it was possible at these lows. If that hadn't turned into an upside, and we waited for that low volatility period, see it there, if that had rolled to the downside, that number would have been possible. The minute the market showed us, we got long, and because it was a new setup moving in a new trend, we stayed long for a large part. So even though we weren't the first there, because we always suspect continuation, we did exceedingly well because we held on deep into the bull market, getting in at 4.5s and holding all the way through. So that's the benefit of methodology and guidance. Those are 3 decisions, and I'd argue that for the uncertainty and the probability nature, we got largely those 3 decisions accurate. Definitely directionally immediately on those 2, here and here, and very quick to dexterity to accept we're not going to get a continuation here, but we're going to get the first upside in a new trend. And we kept our mind open for that, so we very quickly flipped the minute the volume and the impulsiveness came in. And then we stayed long because it's a very strong situation. Now, what could be the outcome of all of this structure, and why is it such a good thing, I say? So let me just redraw that, and maybe there's a way I can just expand this chart into the screen area a little bit bigger. Ignore the indicator for now. It's a volatility based one. I can make it real small. So what would be the benefit of this structure? Well, what will end up happening, and this is where we have a 360-degree view, and actually it's more bullish. So the guys that want bullishness and hate us for not going with an all-time high narrative, not going with an all-time high narrative. By the way, guys, you've got to follow me on Twitter. You're going to miss out a lot if you're not following on Twitter. And if you haven't subscribed, hit that button now, because there's going to be some free insights that you won't get. And that's where I communicate, and I'm surprised how low the followage is, and those people are getting value. So if you aren't following me on Twitter, jump on it now. It's at the Crypto Sniper, SNIPER, the Crypto Sniper. And all my crypto quick shot views go through there. So once again, for those that had this plan, it suddenly stopped working out for them. What did you get now? And we'll go with the pretty in pink. What I suspect you're getting is an incredibly powerful macro continuation pattern. It's very early to say, and it could be spoiled. So this is a scenario. It's not a forecast, but in my view, it's of the many there's a few scenarios. I wouldn't say there's many, but there's a few scenarios. I think this is one of the most powerful ones. And in terms of when you do get your chance to take the macro long, everyone will be talking about it. But you will have heard it here first before anybody else, because they were all asking for the all-time high. And I was saying to you, you're not going to get it. You're going to exhaust here. So this is a secondary bull market. There's still selling pressures after this 20K period. This was a ball breaker for crypto kiddies, an absolute ball breaker. So many of the smaller, under-trained non-traders got murdered. They got handed leverage. It's like it's going to the kindergarten with 2 and 3 year olds and handing out 44 loaded 44 magnums and Colts with hairline triggers. And then you lock them up in a small room and you say, play with the guns, kiddies. The one who does the most playing with the guns, we're watching you on cameras, wins a marshmallow. And coming back an hour later to see what degree of carnage has been created. And that's unfortunately, untrained traders are the equivalent of infants with hairline trigger magnums being handed to them in a financial context. And this is what happens. So there isn't that, there's still that mourning and that pain. And there's even a monk, they spoke of the monk cycle, the amount of time needed to totally galvanize and get over devastating losses. I've had emails from people that have, put on 6-digit figures into crypto and have lost everything. And not one, not two, multiple, through the hodl and as an untrained trader entering for the first time into a realm. Anyway, all that said, this will be super big because in terms of how we work, you're going to get a very big amplitude of target out of this particular pattern. If we swing down, I haven't drawn it particularly prettily there. I should do a better job than that, but we'll focus in on it. So I just wanted to say, forget that. It's not going to be that, and I think that's already been proven now. And I was saying it before it happened. Why? Because we recognized over here the pressures that were coming in and the lack of power and follow through in this world. Plus, we're in a depression, which is going to have a mini recession within this fake recovery that has been a depression since the 2008 crisis and possibly even since .com, in this wonder world central banking cartel of criminality that we find ourselves in their as little non-playable characters in their puppet show and merely observing lamely with very little effect to influence, but you can protect yourself. In that sense, you're not a non-playable character. So what actually happens out of this is, my take is, you will get at some juncture here a bottoming out. My suspicion is you will not run new lows. In other words, this is going to turn out to be a macro continuation pattern, something like that, for which you will have a secondary low point over here, anywhere in a range. We've discussed this in detail in premium. You know what? I've pretty much given you an idea of where our target is, where we'll close 70% of our leverage. We will expect a small amount of overperformance and we'll play with 30%, a little bit of gravy, a little strawberry for the top of your chocolate sundae that you've already earned and are gobbling down for those that were with us. But then you'll have a secondary rally. People will call for all-time highs again, moon, and it won't be again. So it'll be an echo, seen this movie before, fear and secondary. And I suspect then you'll drift off again, but again, not lower. These 2 points will be points of, for the smart people, accumulation on balance of probabilities. Could I be wrong and you run that low? All of this just goes, shoo. Yes. But I don't see it as a high probability at all. So you are going to get gift buying twice. And you're going to get a mini rally and you're going to go all in and make all the mistakes that you made here and here again, an opportunity to do that. And you'll have to decide if you're smarter this time. And it will top out before the 13.9 and catch people out, because a lot of people say, I'll do it, but this time I'll get out at the 12K, just before the 13.9, and it won't make that. And then they'll find themselves on the wrong side of a downhill again. And then it's going to get boring as all hell, and people are going to switch off out of crypto, because actually everybody is childlike, adrenalized, emotionally responder that wants movement. And when the movement stops, you get bored and you're going to take your skateboard and go play somewhere else because it's no more fun. And that's the point when you hear people say sayings like, Bitcoin has become like paint drying. It is so boring that you should actually start, your palms should start sweating and you should get a nervous little jitter and you should be dashing for your platforms, because that will be your third spinning tops, and final, what we call, and you will learn about that if you did a program, kettle drumsticks, not hammers and shooting stars. They're not in the context of hammers and shooting stars, but you will get range defining candles, not these hammers and shooting stars, but they look the same at a singular candle level, but they'll be range defining with spinning tops in here for a while, and then all hell will break loose. And my anticipation is that it'll be to the upside. And what will actually happen is, apart from making this target at a geometric level, you will get huge overperformance because it's typical of big time frame structures like this. So actually that limiting ceiling that everyone's been drawing in that convex base out, all-time high, bear market, base out, all-time high, in that logarithm, each one going higher than before, you might re-specify that ceiling range. If you get the overperformance, I think that might be possible. And that is when everyone who is smart and still in the crypto game probably gets a gift bigger than they've even had, short of the guys that bought in at $1 in 2009 or whatever it was, whenever it was $1, way before I was even in this field by the better part of 8, maybe 7 years. And if you want that chance again, this is the good news I have for you. And this is my probability scenario of what's going to happen. So remember, I'm warning you in advance, a secondary low, and this is not the time to be buying. As I said to you before, this was selling wicks. This was a rejection. It was 61.8 fib. That was a rejection. That was a rejection. None of these big time frame, monthly time frame, by the way, ever was suggesting that you should go into an all-time high from this point. And yet 50, 60, 70, 90% of retail and about 60% of the leveraged money was on that, on both Bitfinex and BitMEX. And, you know, I want to thank you because you help my community and you hold up the other end and you're a liquidity provider for us. But you can be smarter and you don't have to do that. You know, you don't really have to do that. Someone else can do it. Let new people come in and sacrifice their wallets and get a feedback mechanism. And for those of you that think that's evil, it isn't. It's a trading. I continually got slaps. I continually got bit until I learned. You know, it's a process of getting better. Otherwise, you keep paying. And you can keep paying university fees and keep forgetting to go to class or not listen. And you can keep not getting your doctorate or not getting your qualification. This is the university of life. And you either adjust or you die. And the weakest link in your chain will be exposed to you through trading. And you're only as strong as your weakest link, no matter how robust you are elsewhere. And the markets will keep educating you. So you can think you've saved 10 grand by not coming and doing a trading metamorphosis program, and you can lose hundreds of thousands of dollars. You can lose in missed opportunities to become multi-millionaires potentially. And I don't like saying that. That sounds very sizzly. But in this case, if you were just starting now and you had 10 grand, I think it's broadly feasible, if this scenario plays out and you executed to a high standard and were well trained, that you come out with a 7-digit number at the end, starting with 10. And I'm thinking, it's not in a month, it's probably 3 years. You know, you're not patient enough for that. You want it tomorrow? Good luck. Go hit the BitMEX 100x on shorting right now and then flip and trade emotionally and see how it goes. You can become the second coming of that guy that made 300 Bitcoin from 3 Bitcoin and went all the way back down to 0 in the space of that bear market. He was done by 17K. It hadn't even properly started coming down yet. Just 2,000 from all-time high, and he was done. So, I mean, you learn a skill, but because money flows, here's a little gold nugget from you. Not the boldest, most gamblingest. Money flows from those who value it least to those who value it most. And if getting a skill to learn how to value your money better and enact it better is what you're about, you will become someone who values it more, but it requires deep-seated and psychological change. If you don't value your money and you treat this as a puntathon where you respond emotionally and panic buy and panic sell, you are destined to hand people that care more and are looking after their wealth better your money. So money moves from dumb hands to smarter hands. It always does. And a lot of people have sent me a lot of their money recently. And they've sent a lot of my community their money. More than it's cost to learn how to do this properly. But it doesn't come overnight. So here's a couple of lessons and a word of optimism for you. So I'm calling bear. I'm still bear. I'm expecting lower. And the big story is going to be far better for you. But you've got to be around. You've got to still be in the game. And you've got to be around, and it's designed like if trading is like a bucking bronco, the mechanical bull. There's a big prize for you if you're still on the bull at the end of your 3 minutes. But boy, is it going to throw curveballs at you and pull weird little stunts, twists, tweaks, and bounces to try throw you off. That's where you earn your money. Adherence to a process, not getting emotional, managing small losses, managing your losses to always be small, and getting the key big decisions right where you get deep in the 6 digits money. And if you're on just a new starter with a 10 grand account, you quantum leap your account at these key decision moments during the course of a year. You get that decision right, you enact the right trade behavior at that position. Even if you first suspect continuation, you're in still very early. And you run the whole way instead of getting shaken out on the first down leg because you know the significance of that, and you get that decision right. You don't have to make tons of decisions. You aren't flipping the whole time in and out and FOMOing in and out and dropping time frames. Get it all right on the macro and you've part won the game, and let the macro guide you, and don't spend too much time watching the 5 minute, the 15 minute, the half hour. The money ain't made there. The money ain't made there. The money's made in the sitting and grabbing the big moves and the key decision moments. And as far as I'm concerned, in terms of Bitcoin, there's been a couple of key decision moments in the last year. And if we have a look at them, it was the blow off and the rejection that occurred here after a lengthy bull market. That was the bull market of all bull markets. That gave a lot of people that were net longs only more money than they were able to manage. And guess what? They gave it to the smart hands. Sell off, sell off. Big warning, big slap in the face, wild volatility. That was a key decision moment. The blow off was a key decision moment. One, that was December 17. This was November 18. You should have been short throughout this period, particularly the alts, BTC dominance. You had another key decision. This was your second key decision, and that was your third key decision. And you've just met decision number 4. Ask yourself, in the space of December 2017 through to today, that is going for, let's call it October. It's not there yet, but we're not far off. 2019. The 4 big decisions. How did you play on the 4 big decisions? You get those 4 big decisions right, and you were net long coin in here. You were net short, particularly the alts, because I've got guys that's written to me. They were losing on Bitcoin, and then Bitcoin turned down. They jumped into alts. I'm like, why did you do that? Before you came to me, you'd already destroyed your account. You jump into alts. It was just going down faster. You're in a downward swinging elevator and you jump out of it to go into the mine shaft elevator so that you can visit the core of the earth in terms of your financial wealth. It was just bad understanding of God markets, the core Bitcoin and the alts. We've been absolutely accurate on this bull market. The alts never really finished their bear market. They had a rally in a bear market, most of them, with a few exceptions. Like the Litecoin halving had a reasonable run. It still never got 61.8 and it never got 50% of what it gave up. BNB, maybe. The rest, horrible, horrible. They had a rally in a bear market, guys. We need a clean out. And I'm not a Bitcoin maximalist, but I just go with the chart. The clean out, we have a little bit of a pause period now. You'll get small, bit better rallies in the alts. It's a trap. The alts will start underperforming on the next down leg, which is what I think is coming. So I've given you the macro and I'm asked you the question. You had 4 big decisions to make. How did you do on that? That determines your success and how you're positioned. That was investment long. That was out in tether for your investment and short alts. That was wait and see, possible continuation downside, possible upside confirmed. That was back into investment long. And you didn't have to be there straight away. You got the volume. You could have got in at 4.5, even if you were late and 4,750. You were in, you would have ridden. And this period was out at 10K. We got out well above 10K on our investment. We discussed it for a long time. And our leverage shorts, despite a couple of pings where we would have eaten red with a few spikes, we got in at, over 10,100 on the leverage shorts and probably out of investment 10.2s, 10.3s. And now if it goes to 6.8, if it goes to 5, double your Bitcoin on the way back up. So that's the big time frame and that's a macro analysis. And that's what you guys need to really grip. This is the big game. If you're serious, this is the big game. How much time do you spend on the big chart? And how much time do you think everything is just a rinse repeat of what went before? I'm afraid life ain't that easy. That's you being lazy and not wanting to learn. And actually not recognizing that the market loves you and it's making you wait a little bit longer for a far bigger gift. You're rolling 5 Christmases up here. You're getting a block of coal for 5 years for Christmas. And then you might not have to work again ever in your life on the 5th Christmas. Do you want it? Or are you sleeping through it? You're busy eliminating yourself out of the game because you got upset. You got handed a block of coal for one day. Get given coal. Have a coal fire for winter. Get given lemon. Make lemonade. Because it gets sweet at year number 5. And I've looked at the cycles. I'm thinking very early in Trump's second term is my take. So I do see a second term for him. Anyway, let's take it down.